Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a Warren Buffett article here, and I think everybody has this question. This one runs through my mind on a daily basis, what to do. So, should you buy stocks now or wait? And here's Buffett's advice. So, investors know stocks are more attractively valued now than they were a year ago. I've been buying some little by little. Seems like whenever I buy something, it goes down again the next day. So then either I wait and watch it or buy some more. It just kind of depends. So I've just been kind of nibbling here and there. But Buffett has told active investors to be aggressive but selective in choosing stocks to buy in tough times. And his guidance for investors who don't want to spend a long time researching individual stocks. But stock market investors have had a tough time this year so far. Major market benchmarks are sharply lower than what they were started the year, and every time Wall Street seems to have gained its footing, some new concern sends stocks reeling once again. So for those with money to invest, which there is people out there with money to invest, probably not as many as what there was, but falling markets pose a conundrum. On one hand, share prices for thousands of stocks are much more attractive than they were a year ago. So if you still believe in that a company's business will succeed in the long run, get to invest in more shares at a lower price is a bargain opportunity. So could you buy stocks now? Like I said, I have. Or wait for a future sign. It just all depends on the market. So I just kind of watch, and I think Google was at all-time lows today. I'll probably look into them and possibly do a video, but it just kind of depends what's low throughout the day. I kind of diverse into everything, MJ, tech, Apple, Amazon, Google, so even have a little bit of Berkshire, so it just kind of depends on what I'm buying. I haven't bought just one thing. I actually sold some Caterpillar and Disney a couple days ago when those were up, but they're back down from what I sold them at, so it makes me feel a little bit better. Right after I sold them, they went up a little bit more throughout the rest of the day, but then they're back down again, so I was trying to free up some money to buy some other things, but to get some insight on that question, it's helpful to turn to the words of the legendary investor Warren Buffett, the Berkshire. So there's the Berk A. Last time I saw it, I think it was about $420,000. Berk B, I think, was right around $300. I haven't looked him up. So he's been through plenty of bear markets in his long investing career, and his long-term investing approach has paid off the market-crushing returns through thick and thin. So here's a little bit of advice from Buffett. So has a couple of ideas for active investors that are first seem to be in conflict. When you think about it, though, the net takeaway is to be aggressive but selective in choosing stocks to buy during the difficult market conditions. Buffett's aggressive nature shines through several statements in the shareholder letter that came out in 2010. Big opportunities come infrequently. When it's raining gold, reach for a bucket, not a thimble. So that's kind of an interesting one. That approach in the aftermath of a financial crisis proved to be quite timely, as the ensuing bull market lasted throughout the 2010s and was one of the most prosperous periods in the stock market history. Yet Buffett's success has largely come from being selective with his investments. Fortunately, tough times offer great opportunities to see the truth about companies, and as he noted in the shareholder letter that came out in 2002, you only find out who is swimming naked when the tide goes out. So that's an interesting one as well. You only find out who is swimming naked when the tide goes out. So, wow. You can leave comments if you want on that one. That's an interesting one. Buffett isn't hesitant to hold off on investments, but he's completely confident about making, as he quoted at a 1999 Berkshire shareholder meeting as saying the stock market is in a no-called strike game. You don't have to swing at everything. You can wait for your pitch. So, just like I said earlier, you don't have to swing at everything. I look at everything and then I take a swing at the one that I think is going to go down. So, just like some stocks that I bought this week, I saw the low of the day, put in the buy order for a little bit less than that, and they still filled. So just kind of my advice, but not everyone wants to spend a lot of time figuring out which companies are most likely to outperform their peers for less active investors. Buffett also has some simple advice, dollar cost average using index funds. So that's what I also said, just dollar cost average into it. If it goes back down, if you have some money, believe in the company, buy some more. So not that I give tax, legal, or trading advice, just kind of stating what I do. But if you accumulate a low-cost index fund over 10 years with fairly regular sums, I think you will probably do better than 90% of the people around you that take up investing at a similar time. So the right answer for you, the most important attribute successful investors share, is having an investing strategy. What the strategy looks like, though, can differ among investors without sacrificing the potential for success. In general, though, Buffett's a big believer in bucking market trends, taking advantage of bargain opportunities, and beating back your emotions. The times when you're looking most scared to invest have historically been the best times to get your money working the markets, and so even if you don't dive into them right now, you won't want to wait long before getting a solid investing plan in place. So just kind of some words from the wise. I mean, he's 90, 92, I forget how old he is, so he's been in it for 50, 60 years, if not longer, and so he should have some good advice. So anytime you see an article from him, I usually try to make a video about it. So, but that's it for this one. If there's any stocks out there you want me to take a look at and make a video, I'd be happy to do that as well. If you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.